Today we're going to be talking about Palantir and their upcoming Q2 earnings. We'll go over analyst expectations for EPS and revenue, as well as discuss some of the key metrics to watch for in this earnings report. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before we jump into Palantir's numbers, let's take a look at their stock chart. We can see that the stock has moved up 64% year to date. However, more recently, from March till now, the stock has only moved up about 2.5%. So the majority of this move actually comes around one event, and that is earnings. Prior to their February earnings, the stock was trading around $16 to $17 per share. However, after the company announced their earnings, the stock moved up over 50% to a new price of around $25 per share. And this has been a continued trend for Palantir. The stock has been making very big moves around earnings announcements. We saw this back in May of 2023, where the stock was trading around $7.50 per share. However, after they announced their earnings, the stock ran up over 100% to a new price of $16 per share. Needless to say, right now, earnings announcements for Palantir are massive. They can be a huge catalyst for the stock either moving up or moving down, and they're set to announce their Q2 earnings on August 5th. And analysts have an EPS estimate of 8 cents per share with a revenue estimate of $652.46 million. And on Yahoo Finance, there are 13 analysts covering this stock. They have an average estimate as well at 8 cents with a low estimate of 7 cents and a high estimate of 9 cents. So this is a very tight range. If we look at the average estimate of 8 cents and compare it versus last year of 5 cents, that is a 60% increase year over year. Keep in mind that because these numbers are so small, these increases look massive, right? So a 60% increase in earnings is huge and looks very big, except for when you're talking about numbers that are so small like this. When you're going from 5 cents to 8 cents, that is less impressive than if a company were making $1 of EPS and grew their earnings to $1.60 of EPS over the course of the next year. The percentage that matters a little bit more to me is actually their revenue growth. Right now, analysts have them growing their revenue by 22.4% year over year. I think that that's a solid number. Anywhere between that 20 to 25% revenue growth is going to be good for Palantir. If we start getting over 25%, that will be massive. That could be a huge catalyst for the stock price. Anything below 20%, I think could have the opposite effect and potentially drive the stock down. Year over year, we're going from $532.71 million to around $652.14 million. This is in line with the same number that we saw on Google. This number is also in line with the guidance that Palantir provided during their Q1 earnings report. They announced that they expected revenue to come in between $649 and $653 million, and also provided guidance around adjusted income from operations to be between $209 and $213 million. They also took a look at their full year for 2024 and raised their guidance around total revenue, US commercial revenue, and adjusted income from operations. And that leads us perfectly into some of the numbers to pay attention to during Palantir's announcement. The first one we have up here is their GAAP net income. Palantir has had an amazing last couple of years. They went from in the red by $123.9 million per quarter all the way up to most recently in the green, $105.5 million. I want to see this trend continue. I would love to see that number get up to around $130 million. Rule of 40 is another metric to pay a little bit of attention to. I think the biggest thing for this is to make sure there isn't a drastic move down in this from margins. Right now, if revenue is increasing around 22%, they should be able to come through with a solid rule of 40 number. Remember, rule of 40 is revenue plus the percent of profit. So if we're growing by 22% in terms of revenue, and then let's say a 40% profit margin, that would mean that the rule of 40 would be around 62%, just adding those two percentages together. So right now they're sitting at 57%. I'd love to see this kind of stay above that 50% mark and really show that they can continue revenue growth as well as continue maintaining a high profit margin. If I could only look at one metric from Palantir's upcoming earnings and tell you whether it was a good earnings announcement or a bad earnings announcement, it would be this right here. US commercial customer count. It grew 69% in the first quarter year over year. That's from 155 customers to 262 customers. And here in the second quarter, we are still comparing against kind of lower numbers, with the second quarter of 2023, them only having 161 US commercial customers. The following quarter, they saw a big jump up to 181. So right now, this is going to be a big quarter for Palantir to show that they're continuing growth in the US commercial space. Based on the growth we've seen over the last 3 quarters of 12%, 22%, and 19%, I expect that Palantir should be able to grow their US commercial customers by anywhere from 10% to 20%, which would mean that their US commercial customer count should be anywhere between 288 to 314. And with their more recent growth being around that 20% mark, I would expect them to come through with a number around 300 for their US commercial customers. And this would be a big move, I think, for Palantir to maintain that 20% growth headed into the future, even with a slightly weaker economy. And obviously, more commercial customers should translate over to more commercial customer revenue growth. In the first quarter, they saw this revenue increase by 27% year over year to $299 million. On the US side specifically, they saw this increase 40% year over year to $150 million. And obviously, the long-term hope is that increased revenue will translate down to more EPS. And right now, analysts have an average EPS estimate for 2024 of 33 cents per share, with a low of 30 cents and a high of 37 cents. This would be up year over year from 25 cents per share. And in my opinion, these numbers could actually be low, because when you think about software as a service businesses, once the software is built out, your profit margin starts expanding as you roll it out to new customers, because now that money is basically just going to the bottom line. You're having to make small tweaks to the software to make sure it adheres to these new businesses. However, after that, it basically runs very similar. And especially when you start thinking about customers coming into the ecosystem that have similar business models. If we think about airlines or even rental car businesses that we know have interacted with Palantir, as they start attracting more of those customers, they can start profiting more and more off of the revenue that they're bringing in. Palantir hasn't necessarily proven out that that is the case, that they are going to experience higher profit margins with more revenue. So right now, they are probably trading at a little bit of a premium, and that's especially true when you look at analyst price targets. They have an average price target of $22.07. The high price target is $35, and the low price target is $9. $9 seems kind of out of the question in my opinion. I think Palantir has proven that they can be profitable. If they were to sink back into being an unprofitable company, I do think they could be headed back to $9 per share. But right now, I think that's a little bit out of the question. $22 is probably a safe estimate. This does represent a 17% downside from the current stock price. However, I think that analysts are probably waiting to see this upcoming earnings announcement before raising their price targets, because the stock price has ran up so much. Palantir does need to outperform in this next earnings to really show that the price is justified. And this high price target of $35 per share, I definitely think is achievable, but it's something that's going to happen over the course of the next year, year and a half. I think that Palantir has priced in a lot of growth right now, and they would have to start beating numbers by a lot to really start driving up the stock price to around $35 per share. Keep in mind that I do own shares of Palantir. I'm going to be paying attention to this upcoming earnings announcement and the metrics that I talked about in this video, because I think the commercial customer account is going to be a very important metric for Palantir moving forward. Their government revenue has slowed and is really growing by low double digits, and that is something that I want to see continue. I do want to see that base continue to be built out. However, US commercial space, that is going to be a high growth metric for Palantir, and I want to see that continue to expand. But keep in mind, don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, how can you tell if a pig is hot? Check the comments down below for the answer. Thanks for watching.